How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was submitted on May 21st, 2019. Here's a snapshot of the positions held by the institutions as of that date. And let's take a look at gold. Okay, so what do we see here with gold? Now, in the previous week's data, we saw a massive increase in long positions from 185,000 to 226,000, and that came as price was consolidating and then rallying up. Okay, so what took place there is, if you examine the daily chart, which we've done in the community, you will see that there was a descending trend line on the daily chart, that the institutions used these long positions to push price up into. And then what took place after that was they broke the trend line. They basically got retail traders to get out of their short positions at a loss, and they took on those short positions right before dropping price. So a little bit of trickery on the side of the institutions, but it's a perfect example of what it is that they do, because the very next week, look what happens. Longs get closed out because they no longer need them, and they took on the short positions from 101,000 to 114,000 positions. Okay, so remember, they used to be at 185, they used to be at 210. Now longs are at 203 and shorts are at 114. So we're still sitting at this ascending weekly trend line, and that's why we're seeing all of this pausing behavior right here. But eventually we do believe price is going to move to the downside. Taking a look here, you'll see the sentiment is a bit bearish, with the coloration of the cells being a little bit more red than blue, even though, or I should say, we also have a big drop in net positions. Used to be positive 75,000, so it's a little bit up. Okay, so even though there's been an increase from 75,000 to 88,000, still that bearish sentiment with gold. And now we move on to oil, and we see consolidation right before the big drop that took place. And we can see that long positions were closed off from 607,000 to 585,000, and at the same time shorts were closed off from 120,000 to 107,000. Bottom line is long exposure jumps up 1 point and net positions slightly decrease. So net position slightly decreases is what the overall agenda is, I believe, or we believe, by looking at the market dynamics on the charts, profit taking on long positions. So why would they reduce short positions as well as long? Well, we've seen this pattern before, and what typically happens is when they close off both sides, it's usually to create stability in price, because they don't want to close off their long positions as price is dropping. They want to close off those long positions at the highs. So when you close off shorts, it causes price to go up. When you close off longs, it causes price to go down. So closing off longs pushes it down, closing off shorts pushes it up, which helps maintain price at a specific level, which you could see right here with this consolidation here. So we've since seen a big drop in price. It's either from a big increase in short positions or a big decrease in long positions. We have to wait until next week to see what that will be because of. But bottom line is, this drop is what we've been expecting, and now we're starting to see the beginning of it. Okay, now we move on to the next. We get into the dollar, and we see an increase in dollar from 40,000 to 43, and an increase in shorts from 13 to 16. That comes as price was rallying up right here with the green candle. So the net effect is that long exposure drops 3 points from 75 to 72%, but a slight increase in net positions from 26.6 to 26.7 in net positions. So we've seen a slight decrease since. We're falling short of hitting some weekly supply. We could get more of a push to the upside, but here's the thing. When you examine what's taking place with the dollar pairs, you can see that the dollar pairs have been very aggressively long, okay? And when positions are very aggressive to one side or the other, we tend to see some profit taking place, okay? Now, we don't see it very aggressive here on the dollar, but when we look at the other dollar pairs, you'll see that aggressiveness. And so those charts are what is causing this reaction to the downside here on the dollar, even though we fell short of hitting this weekly area of supply. Okay, so I'll get into this more when we get into the other dollar pairs, but for now we'll go into Aussie, and we see this big drop in price was due to two things happening: an increase in longs and an increase in shorts. So there's another theme that is coming into play here. So we can see when we examine the positions of all the major pairs, including gold and oil, that positions have come to a point where they have exhausted themselves. And when they do so, we tend to see some profit taking place. Okay? And when that profit taking comes into effect, we see reversals in price. Now, you can see that right now shorts are at a 105,000, okay, which is aggressive. And you look here at the total size of positions, it's an aggressive territory. So one or the other has to give way. It's going to have to be some profit taking place, and it's likely going to be on short positions, okay, since they are the one that's very aggressive. So why add longs? Well, if you knew that price was going to move up like this based on you closing short positions, okay, then you'd want to take advantage of that. Okay, so remember, you accumulate shorts, price goes down. You close off those shorts, price goes up. So you would take advantage of that. And plus, when you add from 93,000 to 105,000, you're going to be adding shorts down here. All right? Now, if price is going to go up here, you'd rather have those short positions at a higher price than lower. So if you start hedging down at a lower price, what happens is when price gets up here, you can close off those longs, and it's as if those short positions you opened up here are up higher. So it's a smart technique. We've seen them use many times, and it's likely what is going to be taking place in the following weeks to come. But we'll watch and see if that is indeed what is going to take place. So now we have one of the dollar pairs that I was mentioning. Okay, and what we can see is that we're up at the highs. Okay, 82% was the previous high in long exposure. Now we're at 78%. Shorts are cooled off. We were very aggressive, became a little bit more aggressive here, and now taking profits on long positions. So the only thing is that even though taking profits on long positions, price has been holding pretty steady. The dollar declined somewhat this past week, and we see this holding very steady. And the reason being is because, and I've explained this in the Forex market outlook, is the two forces that price is sitting in between right now. So that's what's holding price. I sense that when the dollar eventually does get stronger, this one's going to just shoot up like a rocket because of it. Now we go over to the US Swiss franc, and here's another one that I was telling you about, which is leading the market. We are reacting from a weekly supply zone. That's the first thing. Okay? We are reacting from a weekly supply. And so the supply force came into effect, which pushed price down, which caused the dollar to drop even before hitting its own supply. And so another thing that came into play is profit taking on those short positions. You know, they were very aggressive. Total size was very aggressive. 86%, very aggressive. Now we're at 90%. That's only because they've been closing off their short positions as well as those long positions. So right now they've been focusing on taking profits on longs. Soon they're going to have to reaccumulate a long position if we're going to see a continuation of the move to the upside. So we are waiting for that to happen. When that does, we will re-engage in this chart and get in some long positions. Now we go to the euro. We're not seeing much here. Price came up to the weekly trend line, moved back down. We see them increase shorts and slightly decrease longs. Again, there's not much to see in terms of here. We know bottom line is that they are net negative, so expecting a push to the downside. We're just waiting for the other markets to fall in line. Pound US dollar, we see a massive move here in shorts causing price to drop hardcore. Longs also closed off, but here's the key is that, shorts are the more aggressor, right? And we've talked about this in previous videos, that on the higher time frames, we have higher time frame forces pushing price lower. And so the bias is that we see a bigger push to the downside. And now we just had that thesis growing in strength by seeing the institutions increasing their short positions from 52,000 to 71,000. That's a massive, massive move. Okay, so now we move on to the US dollar Japanese yen, and here's another one that's been shifting momentum. We've talked about how on the grand scheme of things, the bigger forces that are in play here are coming from above, pushing price downwards. So we are expecting more downside to come. And that comes perfectly timed, as we were very aggressive with long positions, and they've since taken profits. So again, you see the same theme playing out here. Profit taking on long positions on dollar pairs. Okay, expecting this to go even lower in the weeks to come. And last but not least, we got the Kiwi, and this one's doing something very similar to what we're seeing with the Aussie. We see them increasing longs and shorts at the same time as price was dropping deep within the weekly area of demand. Likely going to see a push to the upside and profit taking on those short positions before they reaccumulate to cause price to go even lower. All right. And there you have it. That's your May 21st, 2019 CFTC data. Hope you enjoyed it. Any questions, visit www.whiteoakfx.com. Send me an email. Thanks.